So, welcome back, guys. How are you all? I'm always fine. No need to ask me. It's a new week and a new day. Before going further, let me know voice is okay. All of you know I'm very afraid of my voice. It's kind of weird thing to ask this. I mean, about voice every day, but I have to ask this because I need to know first that you guys can hear me clearly. So please let me know for going further that voice is okay. Good morning. Don't know. Okay, so if you think voice is clear, perfect. Thank you, Martin. Thank you, brother. In that case, we can go further. So, all of you have remembered yesterday we have marked the daily fair value gap for dollar index. This is the dollar index chart. Good afternoon, brother. Everything good. Thank you, brother. Thank you very much. This is the daily fair value gap. I was expecting that market can just tap the daily fair value gap, or it can trade the daily fair value gap before going higher. Now, I will go step by step. First of all, today is Monday. What is our expectation from Monday? Monday, we won't see some kind of this run. Okay, what we will expect? We will expect some kind of accumulation phase, something like this. Okay, price will be range bound. This is the way Monday actually we saw the price action. Did I tell you Sunday? Should be Monday. Okay, so in Monday we actually expect some kind of range bound price action. Now, where is your range? You need a range, right? You see, yes, I mean, last day high, last day low. I mean, Friday, this is the Friday candle. So this high and this low should be your range. Yeah, it can go little lower than this low, or it can go little higher than that high, but it will be inside this range. This is our expectation from Monday. Okay, we will think market won't go so far to the lower side, or it won't go so far to the upper side. It can go. It is not certain that it is bound to stay over here. Not like that way. But this is our overall expectation that market will be range bound. It will be inside this range. I will go to the 1 hour chart. I would like to see how it works. This order block I don't need anymore. So it is over here right now, and this is the daily fair value gap. And all of you remember this is the hourly fair value gap. And yesterday I told you why I didn't move. I mean remove this fair value gap. I mean the breakaway gap, because I didn't see any kind of perfect price action till now. Okay, I saw anytime price came to this gap, it went through it. I mean, it went through the level gap. Okay, that's why I kept it till now. But I will see how it reacts over here. It's not important to look for this fair value gap. The important thing is this daily fair value gap. In my opinion, this daily fair value gap is more important than this two level. Okay, I mean this fair value gap. But I just kept it. Okay, this is for observation. I'm also learning, brother. I'm not a pro or some kind of the best trader in the world. Not like that way. I'm also learning, so I really would like to see how it works. So Julie, hello brother, how are you? From here we can see till now market is actually going to, I mean trying to go lower. I will see how it works. This is the low from Friday, and I'm expecting that market will, I mean it will stay inside the range. This low, this high, this is the range. So price will stay inside this range. It can go a little lower, to be honest. I mean it can go to the consequent encroachment of this hourly fair value gap. Then it should go back to the range again. I don't want a big run. So now what you are learning, whenever you will open your chart, you have marked all of this level from yesterday. I mean Saturday or Sunday when market is closed. Okay, and now in Monday when you have opened your chart, you know what is this level, where is price right now. Price is over here. Below the price you have the daily fair value gap, Above the price, there is your weekly fair value gap. This is the low of this weekly high fair value gap. So price is inside this range. Where will price go? How will it go? You have to understand this. That's why I have uploaded the video how price acts in a specific day. In Monday, how it will react. You have to know that before, before printing the price to the chart. I talk too much. I know. I know. Now, if you go to the 15-minute chart, nothing is important. Price is just trying to make some accumulation phase over here. That is good. I will keep the dollar index over here. In 1 hour chart, and I will go to the first. I should go to the Euro USD because yesterday I told you that I will go Euro USD, but I forgot. I had no mood to go over there. I don't remember why. I'll go to the Euro USD. Is there anyone who trade Forex right now? Is there anyone? So this is the Euro USD. I will remove this. I don't need this one. This one is also not important anymore. You look at the body over here. Price actually traded order block level. Actually, I marked the order block from the opening. Okay, unapostolic. Yeah. Okay, brother. I love to. Mark the order block from the opening of the order block level. Okay, consecutive order block. I really love to mark the opening, but sometimes price actually trade the week. It can happen. So from the lower part of the week to the opening, and also the consequent encroachment of the order block, all of these levels are important. So price actually went to the week. It didn't reach to the opening of this order block. I am not telling anything about order block. I'm just giving you a general idea about order block because all of you know I really don't feel comfortable to talk about order block. So price went over there, then it went lower, and right now price is over here. You see this sell side liquidity. This is very clean, and then this sell side liquidity. All of these places are very clean, but today I want to see price will be range bound. What do I mean that? Price should be inside this box. Okay, it can go little higher, it can go little lower, but instantly it should have come back to this range. This is my expectation from Monday. Thank you for the live. You are most welcome, Rahul. Don't know. Gold Nas only. Okay, gold. I will go to the gold. Remind me later. Okay, I will go to the gold. Before I forget, you said to remind you to show how you hide or organize your higher time frame arrays. So chart isn't so clogged up. Okay, I remember what you are asking, that how I remove any level from my chart, right? When I decide to remove some kind of level, and that is not more any more important. Okay, if you remember at the beginning, I removed this consequent encroachment. I marked it over there, and I was expecting that price will go over there. That's why I marked this weak consequent encroachment, and then I just removed the what do I mean? I mean the level. Okay, because price actually reacted from this order block. I don't need to keep them anymore over there. So when price leave a area, I remove the place. There is no chance price will go over there. So that's the thing, I remove that area. Now if you guys can ask me in what why I have marked this area. Price is right now over here. This is the swing low, this is the swing high, this is the range. Price should stay inside this range. I am expecting that price will, I mean, it will it will stay inside this range. Not all over this range. This is the extreme level range, okay? And if you look at this candle from yesterday, not yesterday, it's from Friday, price will keep inside this range. It can go little bit higher of this high. It can go. I'm not telling that price is, he is. bound to listen to me. It's not I'm telling. I'm just telling price should have stay inside this range. It will just consolidate or accumulated some liquidity inside this range. But it can go little higher. You see the very little fair value gap over there. It can trade that fair value gap, but when it will trade that fair value gap, it should have come back to this range again. So if you guys just mark this candle high, this candle's low, I hope you guys will get some kind of, I mean, precision. Okay, so this is important level. I'll go to 1 hour chart. I think I should have keep it hourly chart as well. So if you go to the 1 hour chart, guys, I'm telling you something and don't think it will happen. Okay, I'm just giving you an idea, overall idea. So this is the low. You see the low. I'm expecting that market will trade this low, but not today. It will happen maybe in Wednesday or maybe in Tuesday. In no, not Tuesday. No, Tuesday is kind of a manipulation phase, but we will see how it trade. But today, price should have stayed inside this range. It can go little higher. I mean, to this fair value gap from hourly chart, this fair value gap, or I will see how this hourly fair value gap works. I will look both of them, but I really want to keep the price inside this range. I mean the yesterday's range. Now this is the thing you have to understand. Monday price action, Tuesday price action, Wednesday price action, Thursday, Friday, every day's price action. It's different. We have an overall idea that market will go lower from our weekly analysis, though I didn't analyze the Euro USD, but as the Euro USD, Nasdaq, EMIN, S&P, all of them are actually like brothers. They go in the same direction. That's why I know that from the hourly chart, this is this sell side liquidity and also the sell side liquidity over here. This should be this week's target. But price won't go just over there. It will make some accumulation accumulation over here. Tuesday I will expect some kind of manipulation. Wednesday, basically Wednesday I will expect some kind of distribution. I'm in the extension. Okay, before Wednesday I want to see how it works over here, how it make the liquidity, then how it take the liquidity. After that, if it give me any kind of sign to go lower, I will take my trade over there. Okay, is it easy to understand or it's complicated? Hello tropical music, how are you brother? You see this high, you mark this high. Okay, let me just mark this one. You can mark this high and this fair value gap, this 15-minute little fair value gap. Here it is. So this is the 15-minute fair value gap. What price can do? It can go above, take the buy side liquidity, and it can trade this fair value gap. Then it can break lower. Okay. Overall, I want when price will go higher, it will go lower. When price will go lower, it will go higher. This is the thing happens in Monday. Okay, and you have to be practical and you have to be used to with this price section. Otherwise, if you think market will go higher, it will trade this fair value gap, or maybe it will take the buy side liquidity in Monday, then you will be chopped up. So you have to understand the price range, how it works actually in Monday. You don't make it complicated and weird these things are. Yeah, thank you, brother. One of my brother, it's out of topics actually. One of my brother, he told me today that I repeat things. I mean, every analysis I do in the same way. So I think I should talk about this a little. I mean, for 1 minute, as at least 1 minute, I should talk about that. Okay? Yeah, I am agree with him that I show you the same thing again, again, and again. Why I am doing this? Do you need more information? I mean, the new information. Yesterday, think I'm talking about today, like the fair value gap or the buy side liquidity. Tomorrow, I will talk about order block. The next day, I will talk about order block or breaker block or I fair value gap or I mean market maker sell model, market maker buy model, whatever. Just new information. If I give you continuously, if I give you the I mean new information, Do you know what will happen? You are learning, okay? So you will be confused how to use all of the information all together to the chart, and how I can go to the trade execution from all of this information. Instead of that, I am giving you the same sheet every day. Why? So that you will be used to see that things happen every day. When you will see it happens every day. For example, I'm showing you the fair value gap right now, okay? How it works, how consequent encroachment works. Every day, every session, I'm showing you that. So you will be bored. This guy is showing us same thing, same thing. What do you need? You need money, brother. You are not here for learning. Don't say me that you are here for only learning. All of you are here only for money. So if I show you one thing that happens every time in the chart, wasn't it useful? Or you need more information, but maybe one day it will work, the next day it won't work. That is more useful for you guys. Let me know, okay? Because I'm thinking to give you the same thing so that you guys will be bored by seeing that happened every day. And when after 1 week, 1 month, 1 year, whatever times you need, when you will see, no, this thing happens every day. So if it happened over here, and this is the setup right now, price will go over there, it will act like that way, then it will go over there. Won't it be so easy for taking the entry beforehand? I mean, before printing the price over there? Let me know, okay? Because I was thinking that I will give you something that happens every day, every session, every time. Whenever you will see, it will happen over there. And this way you will be confident to take your entry to, I mean, to be profitable, okay? And whenever you will be inside a trade, you won't be afraid that I will be stopped out or what will happen. You won't trial your stop loss too fast. Everything will be easier for you. So this that was my actually way to teach you. So I don't know it is helpful or not, but I was thinking like that way. So I think it's enough for Euro USD. You have to mark some liquidity from here. If you look all of these lows, this is your clean sell side liquidity. I mean, this low, they are all clean sell side liquidity. Okay, if you go to the 1 minute chart, you will see, look, all of these are clean sell side liquidity. Also, you have the sell side liquidity from here. Let me mark them as well. Uh, 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 okay, and here. So this is all liquidity. Okay, I don't want to go lower, much more lower. This is all liquidity, and price is over here. We know how it reacts in Monday. So if price can go higher, it can take the buy side liquidity. Maybe it will trade this, I mean, this fair value gap or something. I'm not used to with this. I mean, this what is it? Euro USD. Right now, I'm seeing a setup over here. I'm not telling you can take this entry or something, but I'm just seeing that there is a very nice setup. In my opinion, this is very nice. Okay, so this is your market structure shift, and this is your fair value gap. It should work. Your entry should be over here. Your stop loss will be below this. I'm afraid of the precision in forex, because forex is kind of manipulation. Okay, so I really am so afraid of that. It's kind of an entry. I mean, in my opinion, this should work. Let's see what happens. I will come back here later and I will see. And if any of you are here, I mean, who trade forex, you can just, I mean, if you have more monitor, you can open this chart in one monitor, okay, so that I can learn, because I have only one monitor. I'm just using that one. So that's all for forex. And let me go to the mini S&P first. So there is your mini S&P. I will go to the daily chart. Is there anyone new here? The same thing, okay? I told you in dollar index, I told you in forex. Now I'm gonna tell you the same thing over here in mini S&P. The last candle, I mean, this is the last daily candle from Friday, okay? High and low. You mark high and low. It will take one liquidity. It can take one liquidity. Either it will take from the low side, I mean sell side, or it can take the buy side, okay? Let me do it. Otherwise, you guys will be confused. So this should be the range. Price should stay inside this range. It can go little lower, it can go little higher, but it should stay inside this range because this is Monday. We don't want any kind of expansion. But can price go lower? Yeah, it can. Can price go higher and take the buy side liquidity from here? Yeah, it can do it. I'm not disagree, but overall my expectation is market will stay over here. That's why uh I just I will go over there again. Sorry for that. U U USD. Euro USD. I'll go 1 minute chat. Okay. Is it Euro USD or expected? So I was expecting that market is over here. It should go high first because it's too far from here. Let me mark. Okay. It's over here right now. It's going higher, 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 higher. This is the highest high. Price should go and take the buy side liquidity first. From this fair value gap, it should come lower, and then it should take the sell side liquidity because this is Monday. We are expecting some kind of accumulation phase. It should go higher one time, it should come lower another time. This should be the way price will work today. And if you see something different, I mean some kind of big run to the upper level or to the lower level, you will just avoid that session or that specific time. Why? It's because today is Monday. We are not expecting that. Okay. What is the time for the forex? It should be 7 to 10, right? So we are inside the what can I say? Inside the zone. It shouldn't break this low, but if it breaks the low, that would be something very unusual. It shouldn't do like that way. It should go and I mean run too fast higher right now. It should go like that way. I will check that later. Okay. So that was my expectation. Okay. Overall, I am thinking that market will just come lower one time, it will go higher one time. It will come to the middle maybe, then it will go higher. It will come lower again. It will just do the accumulation today, not expansion. That is the thinking from Monday price action. I'll go elimination P. So from elimination P, this is the hourly chart, and you can see this is the range. Welcome, Domino Forex. How are you, brother? So this is the chart, and you see this candle. I mean, this high and this low is from daily chart. I mean, daily candle. I marked this fair value gap yesterday. I want to see how it reacts over there. I want to see it will, I mean, reject from the consequent encroachment of this hourly fair value gap. Then it will go higher. It will at least it will trade this fair value gap today. I am expecting that. I don't want any kind of lower run today because we have time for I mean Tuesday, Wednesday, Thursday we have a lot of time to go lower. Today I want to see some kind of higher price action. Okay, so price should go higher and at least it should trade this. I mean this fair value gap, I fair value gap, whatever you say. I would like to see this and also the consequent encroachment of the monthly fair value gap. If it has energy, then it should go to the monthly fair value gap consequent encroachment, but I don't want to see it will break this high. I really don't look. I mean, I don't like to see that. That is the thing. Okay, Hardik, how are you, brother? I'll go to the 15-minute chat. Guys, are you getting my point? This is your new week opening gap, and I think you guys have already marked this opening gap because this is outside of the last week opening gap. Okay, last week opening gap. This is the outside of the opening gap, so you have to mark this new week opening gap for E-mini S&P. And if you look, price actually came here to the upper level of the new week opening gap. It went a little bit higher. It came to the water block, then it expanded. Okay. Right now, where price will go, this is the level. It is important for me. I mean, in Nasdaq, I in the morning session I gave you an screenshot for this 15-minute fair value gap, but for E-mini S&P I didn't actually see yet how it will work over there. But my expectation is this hourly fair value gap. This is my main target. This 15-minute I will keep it. I will see how it reacts, but this hourly fair value gap is more important for me. I will see over there how it works. Can I go to my Nasdaq? I love Nasdaq, brother. I can memorize everything for Nasdaq. I'm sorry, brother. I'm too fast to come over here. I really would like to see how it works. So for Nasdaq, where is your range, brother? This low, this high, this is your range. I'm expecting price will be inside this range. Same thing, brother. I'm just telling you same thing. Every time telling you the same thing. So overall, my expectation is price will go lower, but today I want to see price will stay inside this range. It will go little higher maybe. It will go little lower. It will just accumulate. I mean consolidate over here, and then later it will go lower and it will take sell side liquidity or whatever it will do. It will do later. And here is your hourly chart. If you look at this hourly fair value gap, that is very important. You can mark this hourly fair value gap, but more important when I'll be in 15-minute chart, you will see what is the more important. Okay. Anyone has opened the Euro USD and can let me know was I stopped out or not? Euro USD Forex.com. Just let me know. Okay, I was stopped out or not. So this is the buy side liquidity and this is the sell side liquidity. I told you to mark the buy side liquidity and sell side liquidity. How do you mark the buy side liquidity and sell side liquidity? Or you can say your draw on liquidity. Okay. Hardik, I'm fine, brother. How are you, brother? Whenever you will see some kind of relative equal highs, relative equal lows, that is your sell side and buy side. Remember, guys, you will see market precision whenever you will see this thing. Okay. And it works, I mean, in Forex as well. So whenever you will see this kind of equal highs, not I don't need the exact, okay, relatively equal highs or relatively equal lows, but it's very near. You see, very near. You will mark them. If it is from 1 minute chart, I don't care. If it is from daily chart, I don't care. I don't care about the time frame. I care about the equal lows, equal highs. You will mark them as your buy side and sell side liquidity because this is your drawn liquidity. Now I'm slowly going for the price action. Okay, from here. Okay, I didn't talk about the price action yet, but now I will go for the price action. Let's go. I'm going to 50-minute chart. This is my 15-minute chart. All of you know, I mean, I didn't actually tell you, you don't know what this level is because I have just done the video and tomorrow it will be uploaded at New York time, maybe, what time is it? At New York, 6 maybe, 6 a.m. in the morning, you will know what is this level. Right now, you don't need this one. So this is my sell side liquidity. This is my buy side liquidity. What is this level, guys? This is new week opening gap low, new week opening gap high. It's from yesterday. Okay, so this high and low, this is the consequent encroachment. Now look at the price. I'll just remove this one. Okay, so it stopped out. Okay, Hardik, I will look at that later. i mean I will see. I shouldn't be stopped out, or if I stopped out, then I will see what happened over there. I will go for that. But first I need to talk about the price action over here. Look, it has made the buy side liquidity, it has made the sell side liquidity. Where price came to the constant encroachment of the new week opening gap. Guys, be careful. Okay, I'll just remove this level. I don't need this one right now. Later I will mark them again. So this one is no need, and this is also no need. So there is one level, new week opening gap high, new week opening gap low, new week opening gap consequent encroachment. This red level is for sell side, and this green level is for buy side. Price came here to the opening gap high. Where did it came? To the consequent encroachment. Where did the body close? At the level of consequent encroachment. Price went higher. Where did it go? To the new week opening gap high. Did is it ever? I mean, can it break the high? No. So do you know where price will go? We don't know. It can go lower. It can go higher. It came back again. Where did it came? To the to the consequent encroachment. Nobody closed below the consequent encroachment. Now price went higher. It has broken. I mean, it has broken this high. See, now we are little bit confident that market will go higher. Why? Because this consequent encroachment is stronger than this new week opening gap high. All of this level, guys, I am talking about this for last 2 weeks, that these levels are very strong. Low, consequent encroachment, and the high. When this is broken, now you can expect market will go higher and it will take the buy side liquidity. When it you will think like that way, when you will see this candle, this specific this bull candle, because it has closed above the new week opening gap high, and look at the consequent encroachment. Nobody closed below this consequent encroachment. That means price is telling you, brother, brother, please go. Don't think I am going lower. I am going higher. Look at me over here. The price is telling you the story. Why you are not listening to him? This is your fault, okay? Not price fault. Price always tell you where it would like to go. So you are actually reading the price from here. You are not looking for some kind of uh, entry from here. You are looking for what? I mean, where price will go right now. Every time when price will be somewhere, like price is right now over here, okay? What is your level? At the upper level, you have this 15-minute travel gap. At low, you have this opening gap high now. Now, this is your support level. This is your resistance level. You will read how price will react in these two levels. If it would go above this 15-minute fair value gap, it will break the consequent encroachment or the fair value gap. Okay? If when price will go over there and it will come back over here, if you see it breaks the new week opening gap high, like let me give you the example from here, okay? Look over here, okay? It came here to the consequent encroachment. Look over from here, it break this one, and I told you if it break and the very next candle, if it can close above the consequent encroachment, then this is the fake breakout. I told you yesterday, if you remember or not, I don't know. Then it came back again to the consequent encroachment and break higher. When I have seen this break higher and very next candle came lower, what does it mean? Fake breakout, fake breakout. You are not, you don't know where price will go. Then the very next candle, it came to the consequent encroachment, closed above the consequent encroachment. Then it went higher to the new week opening gap, closed above over there. Price failed to go lower. Instead of that, it has made this as your support. So it went higher. You see, it came back to the here. It will give you a entry. This is a 15-minute chart, guys. This is not 1 minute chart. So you will get a lot of entry when you will be in 1 minute. Okay. So it came here and it went higher. Now it has broken this high. When it has broken this high, that means price would like to go lower. Where it will go? To the consequent encroachment. It came here. It stopped over there. It went higher. It stopped over there. Now this is the way you are reading the price. And now it has when broken over there. It come back again, but it's broken the high. That means it would like to go higher because this is your buy side. You see, this is your buy side. When it will go and above, I mean it will clear the buy side liquidity, then we will see how it reacts from 15-minute chart. Now you can ask me, bro, if I just read the price action, when we will take our entry? We will take our entry after 9:30, not before 9:30. If you would like to take your entry before 9:30, you will be chopped up. Yet you don't know how to take entry. I'm just thinking you are new, okay? Don't think like don't think you are You are trading for 5 years and now I'm telling you you don't know how to trade. I'm not like that, okay? I'm just thinking that you are new. So if you don't know how it will react before 9:30, there is 90% chance that you will be stopped out. So you have to wait until 9:30. If you see it will go above the buy side liquidity, it will clear the buy side liquidity, then we will start to look every level from here. When it will come here, I will look the level from here. I will mark this 15-minute fair value gap as well, and I will mark the consequent encroachment of this 15-minute fair value gap. Also, this 15-minute fair value gap. I have all of the level over there, and then I will start to look how it reacts, how the consequent encroachment reacts. Does it want to go lower? If it want to go lower, where is your sell side liquidity? There is your sell side liquidity. Okay. So this is how you will, I mean, uh, read the price before 9:30, and then you will, I mean, place your entry after 9:30. Now, if you see before 9:30 prices over here, I mean, lower you have new week opening gap, higher you have buy side liquidity still not taken. And if you see any kind of setup just before 9:30, that price would like to go higher. I mean, it will clean some liquidity if you just over here. Okay, this one minute chart, some kind of thing like it has taken some liquidity, then gave you a very nice market structure shape with a very nice fair value gap after just 9:30, because 9:30 is the volatility. After 9:30, maybe 9:31, 9:32, you will take your entry over there. Your target will be this buy side liquidity. Is it clear, guys? Is your new week opening gap high correct? Mine is 15120. 15120. Brother, this is from last week, not this week. I mean, I didn't mark this week new week opening gap. I explained why I didn't mark it, because this is override. Okay, you see this, and this is the this week opening gap. This is the this week opening gap. I'm talking about the last week new week opening gap because it override the last week opening gap. That's why I don't need this one. So you can put it over here because this is very small new week opening gap. So you can keep it. I won't I won't tell you that don't keep it over there, but you really doesn't need this one. You don't need this one because this opening gap has rewrite the last week opening gap. So that is the thing. That's why I removed that one. Okay. You okay? So also we can still use last week. Yeah, we have to use this last week opening gap for 5 weeks. You see this one I didn't remove. You have to keep them for 5 to 6 7 weeks. You have to keep. This is very strong, guys. Whenever price will come over here, you will see the reaction. I'm sorry, you heard some kind of weird sound. If you have seen price will, whenever price will come here, you will get the reaction. You have to keep the new week opening gap, I mean the weekly opening gap, for near at least 5 weeks, but it is better to keep them 6 7 weeks. Okay, I mean near about 1 month or 1.5 months. Look how beautifully it has reacted from here, from the consequent encroachment, and this upper level is also very important. So where are you? I will go to the euro USD. I would like to see what wrong I did. So here. Okay. Now look at the price action over there. That's why I don't like Forex. It came lower, it stopped me out, then it started to go higher. See, if it was the Nasdaq, I can easily put my stop loss just below this week. I told you guys that why I don't like Euro USD or Forex, because you can't put your stop loss depending on your analysis. You have to put it something like that way. This is the way for overall. My idea was it will go higher from this fair value gap. This is the fair value gap, but what it has done, it went through this fair value gap, it stopped me out. Now it has started to go higher. See, that is the reason for not trading Euro USD right now, because if you put your stop loss just below this swing low, that is enough for your stop loss. Yeah, you can just take some partial above this high. When price will go above this high, you have to take some partial over there. But I think you are getting my point, guys. That is the reason for not trading forex right now. I love to trade uh I mean what is the future market. This is the reason. I will go over here, and I will just show you the same entry over here. Okay, just I'm just going to show you the same entry. This was the setup. Okay, this was the market structure shift from this is from euro USD. Okay, this is the market structure shift. I put my stop loss below this low. What price did? It came below here. It has stopped me out, then started to go higher in forex. But look over here. Though it's not perfect, I mean it's not clear setup over here, but price never went below this low. It shouldn't go below this low. But if you want to take entry in forex, you have to put your stop loss something like here. You have to do it like that way. Okay, most welcome, my sister. I love you. Look at this run. I will go to the immunity as well. I'm not telling you guys. I mean, I am losing proof or something, but what I'm trying to tell you how beautifully this future acts comparing to forex. Look, this was the setup. Okay, this swing high has, I mean, market structure shift. This is from comparing with forex. Okay, this was the run. I got my, I mean, the fair value gap over here in forex. I put my entry over there. Just think like that way. I put my stop loss below this low in forex. Where did I target? I target somewhere here. Just think like that way. Here, something here. So what price did? It came, but it never break this low. It shouldn't break this low. Do you get my point, brother? It shouldn't break this low. But I will go over there again. You wait, let's see. You just try to understand my point. This is the setup, okay? So here is my I mean fair value gap. I mean I just put my entry over there, and I put my stop loss below this low. What it has done? It went through this low, then it started to go higher. That is the thing. That is the difference in forex and futures. If you look at futures, futures will give you the, I mean, what can I say, the perfect precision, where forex is little confusing. I mean, you can't put your stop loss depending on your analysis. You have to keep some space. I mean, maybe somewhere here. I really don't know. I don't trade forex. So somewhere here, maybe you have to give some little more place so that you won't be stopped out. And then that is the thing. USD trade the 15 ICT Pro Euro USD traded the 15-minute order block consequent endorsement. Okay, no, I was actually talking about the 1 minute chart because that is the clear entry from 1 minute chart. I was in 15-minute chart, but it was clear entry from I mean 1 minute chart. But I will look at over there. So this is the I mean 15-minute fair value gap. I mean order block. It has already traded the order block level one time, two time, three time, four time, four time. How do I know it won't when it will stop to trade that? Okay, one, two, three. So when I have seen it has just like thing like that way, it has traded the 50-minute fair value gap. I mean order block one time, two time. It has cleaned the sell side liquidity very clearly, gave me the very nice market structure shift. This is the fair value gap. I took my entry over there. Where should I put my stop loss? Below this low, right? This should be the rule. But for forex, I have to put somewhere here, maybe here, and then I have to wait for this. Yeah, low lots, high is stop loss forex. Yeah, don't know. That is the thing. That's why I actually moved to future, because look, my precision was it will go above and it will clean the buy side liquidity. That was my precision. Okay. And now look at the price over here. I told you when it will go above this high, you will clear some, you will take some partial over there, and then you can keep, I mean, you can keep your entry. I mean, look at the run, but you are already stopped out. How do you know where you have to put your stop loss? But if you go to, I mean, I will just compare this entry with future. Okay, just this entry when it has happened. Look at the time, 8:20. Just look at that time. At 8:20 it has made over. I will go to the future now. Where is 8:20? 9:20. Okay, there is 8:20. Okay, I gave you the same example, though there is not set up. I mean, it didn't happen over here. But if you look the price, it never break this low. Never it break this low, because this should be the rule. It shouldn't break this low. It should be intact. That's why I can easily put my stop loss over there. That's why I am precise. I mean, most of the time I am right. But if you tell me to trade in Forex, most of the time I will be stopped out, because I am confused where I have to put my stop loss over there. Why I will put over here? What is the reason? There shouldn't be any reason. If you go to the mini S&P, I mean the Nasdaq, look over here. What is 820? Okay, this candle. So if you just think this happened over here as well, if you put your stop loss below this low, even I won't put my stop loss below this low. This is much more lower for me, but just for argument, think you put your stop loss below this low. It will never be broken. If price would like to go higher and it would like to clean this buy side liquidity, it will never broken this break this low. Okay, and do you guys get my point? I mean, I don't know. I mean, some of you actually trade forex. I know. I don't know how you place your stop loss. It is another thing. I mean, the money management, something like that. It's under the money management. So if you know something, I mean, any good tips you can give me, because I'm really so confused when I put my stop loss. I always talk about this stop loss thing when you guys asked me to an analysis for forex. I always tell you, if you are with me for 1 or 2 weeks, you know that I'm really always confused where I have to put my stop loss in forex. When wherever actually, if you trade the even S&P or Nasdaq, you can easily, confidently, you can put your stop loss over there with so much confidence. Okay? So far, I was right in Euro USD as well. Don't think I'm wrong. You see, market is actually going over there, and let me know when it will take the buy side liquidity. Okay, just let me know if anyone has opened that chart. Please let me know. So overall, that is the price action from. And guys, do you get the point from here? I mean, the consequent encroachment and the fair value gap high. When I have seen this it has broken. Sorry, I should be wait a minute. It has broken over here. The next thing you have to think, it will go higher, where it can go to the buy side liquidity. But if price didn't break this buy side liquidity before 9:30, that will be the best opportunity for us to take entry after 9:30. I mean, maybe 9:31, maybe at the 9:30, it will be the best opportunity to take entry, because you will have the most obvious buy side liquidity. But before 9:30, if it is already taken, we have to wait for more price action. So we will see what actually, I mean, do in after 9:30. Okay. So okay. Hey homies, how are you, brother? Music live. An apostolo 1.05291 equal low. 1.052. From where, brother? I mean, from Nasdaq or Euro USD? 1.05291. I think you were talking about. I mean, Euro USD. I'll go over there because I have nothing. I mean, I have still near about half an hour for uh, this opening. Forex have different behavior. No, brother, Forex actually, it's not different behavior. I am little bit confused about the liquidity run. Okay, let me go over there. I should talk about this more. And 1 minute. Okay. So, brother, you told me 1.05291, 1.05291 equal low. This low and this low, they're relatively equal low. Yeah, we have already marked so many equal low from here. here, and here. So that will be targeted, but before them, I need to trade this buy side liquidity, then this fair value gap at least. Okay, before trading all of this sell side liquidity, I need to trade them first. Now, what I am actually trying to do, yeah, I can, like, if I didn't put it over here, just think like that way. Okay, I didn't put it over there. All of this, nothing. I just put nothing over here. I'm just telling you the weird thing in Forex right now. Don't get angry on me because I'm not a haters of Forex. Okay, so look at the price action over here. If you mark this one as your sell side liquidity taken, will it be wrong? In my opinion, it's a very nice liquidity taken. And now I'm not marking this high, swing high. You can say, brother, that is not market structure shift. Isn't it a very nice market structure shift? What do you think? It should be very nice market structure shift. There is a very nice fair value gap as well. Look at this fair value gap. This is a very nice fair value gap. Why do you think this is not a good entry point? Or what would be the reason? It has taken the sell side liquidity. It gave you very nice energetic run with a very nice fair value gap. So whenever price will come here, you have to take your entry. Now, think you have taken your entry over there, and where do you put your stop loss? Let me know that. This should be the reason, right? The candle has made the fair value gap. This is the before previous candle of this candle. So you can put your stop loss just below, maybe a little bit more below. I mean, you are more conservative, so you will put somewhere here. I mean, little bit lower than this. So you will put your stop loss over there, and this should be your target because this is the relatively equal low from 15-minute chart. We already know that. That should be your target. Okay. Now look at the price. It came down and it has just stopped you out. How perfectly it stopped you out and then went higher. Okay. Unupstable. Okay, boss. Maybe entry taken before 8:30. Akhtaruজ্জামান, this is the Euro USD. So for Euro USD, the kill zone is from 7 to 10. So we are inside the zone. I mean the kill zone already. I mean our session has started at 7 and our session will start at 10. So this is for Forex. Okay, this is not for, yeah, future. So you think this is not a good entry. Now when someone will show you perfect entry, where what will they do? Let me show you the thing as well. They will show you, brother, this is your I mean liquidity taken. Okay, thing like that way. I'm showing you everything. This is your sell side taken. This is your market structure shift. Look at how beautifully it has shifted the market. And now you have the fair value gap over here. Okay, this is your fair value gap. If you take your entry over this fair value gap, I mean here, and if you put your stop loss just below this candle, just below this candle, and if you target your stop, I think, just think like your target is over here. Okay, see how beautifully it worked over here. How beautifully. Now tell me the difference. What was the wrong over here? What was wrong over here? Why this entry didn't work? Why this one worked over here? The reason is, in Forex, manipulation happen much more than any other market in Forex right now. Okay, that is the thing. And there is only one way to be safe is you have to put your stop loss. I mean, I think you have to give more space for price to the price for, I don't know what to say. I mean, if you take a entry over here, you have to put your stop loss something here. I mean, below this low, something like that, and then you have to put your target profit over here or somewhere. Okay, so how much it will be? The It's near about 7 pips, something like that, 7 pips, and your target will be near about 14 pips, 16 pips. Okay, I think so. I'm telling you that I don't really trade Forex. All of you know that I really don't trade Forex. I was just showing you the this entry pattern today. I mean, in the morning when I opened this chart, if you are with me from the beginning, so you know. Now I'm explaining this why, because I was stopped out over here. I put my stop loss just below this low and I get stopped out over here. But I shouldn't be stopped out. This shouldn't be happen over here. Whatever you tell me, I won't be agree with you. I shouldn't be stopped out over here because this is out of rules. Yeah, it can come lower. Maybe it can make this equal low, but it shouldn't be broken. This low shouldn't be broken because this is the long, I mean the what can I say, highest low. It shouldn't be broken. It should go higher before broken this low. And I have shown you already in what happened in Nasdaq and E-mini in future market. It never came near to this low. It never came. I was in short you and got stopped out. Oh man, why did you take short? I mean, this is, if you are not with me from the beginning, then I really, it's impossible for me to explain everything right now. We are expecting that price will go higher. It will trade somewhere here. I mean, this fair value gap actually my target. Then we will go for short. I mean, this all of this sell side liquidity after reading the price. That is actually our plan for, I mean, for this Euro USD. Now, any of you here are actually interested for gold? I mean, any of you are interested to gold? Let me know, okay? Gold. I love gold, man. How beautiful the price over here. Oh man. So before 9:30, if I can say, I thought it will take Asian lows after getting 1 hour fair value gap. Oh man, what do I say about that? Not now. Shiba, yep. If I want to tell you about to mark your liquidity, I can tell you. If you are ready, really need gold. Lol. If you are ready, you can mark. I mean, you can write it down. What you have to mark for liquidity. I gave you the easiest one. Equal highs, equal lows, and you will see most of the time it will work. Trust me. Most of the time. I mean, 90% time out of 100% it will work. But now you can mark the liquidity by yesterday's PM session. I mean, from now, like prices over here. So you have to start to mark previous London session high, previous London session low, Asian session high, Asian session low, previous day's PM session high, PM session low, previous days high, previous days low, previous weeks high, previous weeks low. All of these are liquidity. But it's very difficult to navigate the price depending on all of those liquidity. Okay, that's why I don't talk about drawn liquidity. I mean, related with that type of liquidity. Okay, what I have told you, how do you mark your liquidity? If you have seen some equal highs, look at this highs, one high, two high, three high, and they very clear. Amma, if you have seen, sorry guys, this high, this high, this high, they are relatively equal high. It is very clean and very clear buy side liquidity. Look, this low, if you go to 1 minute that you will see more clear. Okay, this low, they are relatively equal low, and then one more time price try to come here. This is your sell side liquidity. Isn't it clean? Isn't it easy to mark? Comparing where is my yesterday PM session high, where is my Asian session high or Asian session low, then how it trades. It's very difficult for me, guys. I know there are some of you it is very easier for you, but this is very difficult for me. I don't like to, I mean, search all of these things. I love to mark equal highs and equal lows as my drawn liquidity. I'm trying to give you the easiest thing, but if you want the hardest thing, I can give it to you as well. Let's see, okay? What is your comment? I was in short. Okay, I thought it is a are I fair value gap more important than standard fair value gap? Well, brother, I fair value gap and fair value gap are the same thing. Okay, it's not. There is no comparison between I fair value gap and fair value gap. I mean, this is the fair value gap. Just think, this is the fair value gap. When it will use as a fair value gap, it will work. When it will go through this fair value gap, it will use as a I fair value gap. So both of them are the same thing. There is no comparison. Hmm, what do you think about UK 100, bro? Elias, brother, what is UK 100, brother? This is the first time I have heard about UK 100. I mean, US 100, I heard about that, but UK 100, trust me, I never heard about that. It always tell us, do not trade, focus on reading the price only. Yeah, brother, that is the thing. I always told you, I try to tell you to read the price. Why it is important? If you read the, I mean, I was with you from 8. Just think, I'm here. I just open my chart. What I do, I just see the previous price action, what it has done over here. Immediately, like, just think about that. Okay, I have just opened my chart. I have seen prices over here. What I do, first thing first, I mark the buy side liquidity. Then I mark the sell side liquidity. I try to find why price was over here, how it reacts before. Now I have this level, I mean new week opening gap, consequent encroachment, and I can see price tried to go higher, failed to go higher. It has made the buy side liquidity over there. It came lower. It has traded the consequent encroachment. It broke the high, and now price is over here. What is it going to do? It is going to break the buy side liquidity. That is the most obvious thing right now. But it is not certain, okay, that price will go higher and it will take the buy side liquidity. It can go lower until I mean take the sell side liquidity first. It can happen as well, okay. But overall, my expectation is price will go higher and it will take the buy side liquidity. Now I will go 1 minute chart. Now I will try to find some kind of setup before 9:30. I mean, just before 9:30, if I see this buy side liquidity is still over there, I will try to find some kind of entry setup over here. And when 9:30 run will done, I mean after 9:30, maybe 9:31 or 9:32, if I see very nice setup over here, I will take my entry. My target will be this buy side liquidity. So entry setup, guys, this is the easiest thing. You will learn that without your concern. You will never notice when you have learned the entry setup. The hardest thing is reading the price action. Like right now, you are not able to read the price what it has done over here. You are not ready yet. That's why I am with you. I started my session from 8. Why? I know I can take entry before 9:30, but still now I have started my session from 8. Why? So that I can read the price with you guys. I told you how it will work over here. Didn't I tell you? I told you, right? Everything I have described over here, how it reacts over here, and now prices over here. I'm telling you what it will do. It will take the buy side liquidity. I'm telling you that thing as well. You see, this is a very nice little fair value gap. I mean, the 15-minute fair value gap. Just mark it to your chart. It's gonna be important for you guys, in my opinion. Okay, it's gonna be important. So, so just let me go to 1 minute chart. So that is the reason for staying with you guys, so that you guys can understand how to read the price. When you will understand how to read the price, i will be I'll be for no need. Okay, you can remove me from your chart. You can do it, but first you have to understand how to read the price. Everything is under the price action. I mean, whatever I'm telling you here, the entry, the liquidity, breaker block, order block, whatever you tell, all everything is inside the price action. You have to understand the price action. There is no other way for being a consistent profitable trader. Okay, okay. Do you think, okay, boss, I knew it is 8:30. Thanks for the info. No problem, Akhirujjaman. Thank you, brother. I still brother amma. Brother, Amma was calling me, so I told him that I told her I'm just streaming. boy, amma बोल रही है. Yeah, mother's calling me, brother. Gold went. Okay. When you say you are looking for a setup, does it mean you are waiting for a liquidity grab then MMS? then FVZ, or are you just looking for CE of a fair value gap, then retrace, then enter top? Okay, so brother, you have nice question, brother. I really happy for you. You have actually asked very important question. Thank you, Open Heart Ministry. He asked me a question when I talk about I am looking for an entry setup. What actually I'm looking for? He asked me, did I wait for taking the liquidity, then market structure shift, fair value gap, or I wait to trade some kind of CE, then I mean the rejection from the CE, then come back to the upper level of the fair value gap? That 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 is the thing I'm looking for. So what actually I'm looking for? You gave me two example. I mean the two model. Okay, the first model you told me that is the 22 YT model. I really love that model. What is that model? Let me just mark it. Okay, it has taken this sell side liquidity. Just I'm just giving the example. Don't think this is the setup. And it has given me the market structure shift over there. I have got this fair value gap. This is one setup. Okay, I really love this setup. This is the most favorite setup of mine. Okay, now from last week I have just told you how to use the fair value gap. I mean, think this is the fair value gap. How to use this fair value gap? If it reject from the constant encroachment, then if it come back to the upper level, I will take my entry. That is another strategy. I mean, you can take that entry. This is different. Okay, if you stay over here, that is one model. If you stay over here, that is another model. Is it clear, brother? Open Heart Ministry, brother. Is it clear? So this is one model. This is another model. This is different model. Okay, side liquidity. Yeah, liquidity I have already marked. The buy side liquidity I have already marked it. So if price would like to go higher, that should be the most obvious place where price will go. So that is different. Okay, but if I'm looking for entry setup, I look for two types of entry. I mean, not two types. There are a lot of types. I mean, sometimes I look for breaker block, sometimes order block, sometimes fair value gap. I mean, so many things I wait, but till now you all know about 22 IT model, and I'm just teaching you how to utilize the fair value gap. Okay, so you have two model right now. I am going to give you more model, but just give me some more time. Okay. Igor Voronin. Thanks. I love your videos. Thank you, brother. Are you new, brother? Igor Voronin. If I mean, pronounce your name wrongly, I'm really sorry. But I think you were new because I didn't see your name before. Mystic brother, did you see trading view added middle? Oh, okay, Mystic. Thank you, brother. Can you please tell me how to do it? Because I forgot it. Can you please tell me how to do it? I mean, what should I do? Uh, Style. You told this one, right? Uh, uh, uh. Okay. Thank you, brother. Mystic. You have just done so many things. I mean, oh man, thank you very much. It will save so much time. So now I have the consequent enforcement. I didn't know that. Thank you, brother. So that's how I will get. I'll change the dotted line later, but I will customize that later. So price is over here. It didn't clear the buy side liquidity yet. Okay. I will see if it can take the buy side liquidity before 9:30. Then I will wait for more price action. Maybe I mean after that I will look for maybe sell. But if it failed to go over there and it came back to this fair value gap from 15-minute chart. Okay. This is from 15-minute chart. You remember this is the 15-minute fair value gap. So if it came over here before 9:30 and if it didn't clean the buy side liquidity, then I'll look for buy again. But if it is already cleared, then I will wait for more information. I won't just go for buy or short because this is the more obvious place. I told you to keep this 15-minute fair value gap today morning. If you have, I mean, if you are with me in my Twitter, you already know I told you to keep this 15-minute fair value gap. I will wait. Okay. Now look at this place. Very clean buy side liquidity. I really don't want to see that market will clean the buy side liquidity before 9:30. In that case, maybe I will find a very good setup over there. Though I won't put any kind of entry or something. If you just try to copy that something like that, you will be disappointed. So I'm really sorry for that. So is clear. Thank you, brother. Open heart surgery. I mean, sorry, ministry. I'm Travish. Oh, okay. Travish, how are you, brother? Yeah, I know, brother. You were the first one who told me about. I mean, everything. You told me about everything. What I'm doing actually. You are the first one who inspired me. I actually confused by your name actually because Travish. I know this name. How are you, brother? Brother, gold when? Should I go for gold? Oh man. I really love Nasdaq. I always love to see Nasdaq and even S&P. Should I go over there? I'll go. It's becoming clear to me the way you read the uh, here is so beautiful. This is what I was lacking. You will be more clear, Domino. Don't worry. Just stay with me. You are here for maybe 1 or 2 weeks, so give me some more time. At least I reserve 1 month. At least 1 month. Give me 1 month. You will be. I mean, you even don't know where you will be after 1 month. Just turn on. Yeah, thank you, brother. I did it. I turned on. Don't know. Yeah, Mystic, no problem. Thank you. And again, Mystic, thank you very much, brother. Amga, what's up, brother? Different mother and father. Amga, how are you, brother? Oh, yeah, I'm going so much, and yes, I appreciate your time, patience, and us and efforts. You are most welcome. And open heart mystery, open heart surgery. Thank you, brother. Thanks for your inspiration. I really, I'm grateful to you, brother. You trade SPX 500. Igor, SPX 500 is, I mean, if you trade mini S&P, and then you don't need to read the SPX 500. I mean, it's the same. I think there is a little bit difference, but before 1 month, like before 1 month, I used to trade mini S&P, and yesterday I also explained why I am in Nasdaq right now, and when I will go back to mini S&P again. Actually, we have more level in Nasdaq right now comparing to Emini S&P. That's why I'm in in Nasdaq right now. But I will go back to Emini S&P. Maybe it will take little more time, brother. First, need a video chart making. Video chart making. What does it mean, Akhtaruজ্জামান? Video chart making. What is that? Can anyone tell me how to search gold? I mean, what should I write it down over here? Should I blow account? Oh man, sorry to hear that, bro. Please don't try to trade right now with real money. Just give me 1 month, brother. You have spent so much time. Just give me 1 to 2 months. After that, you can trade your live money. I mean, if you think you are ready, you can trade your live money. But please give me some more time, okay? XAU USD. XAU USD. So I will go forex.com. I really don't know which one has the perfect. Okay, XIU. Thank you, Pro Trader Path. You are still here, brother. You have job, right? Today you have job or not? So this is the market from gold. I can see the buy sell liquidity over here, which has taken. The buy side has taken, and then this is the first time after. Do you know after how many times I'm here? Near about 3 years. After 3 years, I have opened the gold chart. This is after 3 years. Trust me, brother. This is the first time I have just opened this chart. Video on chart marking. Chart marking. I did that. I mean, I have videos. So let me actually check what happened over here. I can see the clear sell side for gold. I mean, this should be attacked sooner or later. It should be attacked. This is a very clean sell side liquidity with a very nice fair value gap. I mean, look at this thing. Now, this is the monthly chart. I'm gonna tell you something. You guys will be angry on me. Please don't get angry on me. Okay? What did I tell you? Whenever you will see two fair value gap after taking the sell side liquidity, if you see the market structure shift, if you see two fair value gap, what should be your first target? I mean, where you will take your entry to the upper level. And now, don't think you need some kind of perfect market structure shift. This is the monthly chart, okay? Just a candle shift is your market structure shift for monthly chart. Just don't wait for some kind of perfect market structure shift. Otherwise, you can never frame your trade over here, okay? So, on I have day off on Monday. Okay, brother, you have day off. Okay. Uh, sorry, brother. Yesterday I was just slept. I mean, I was so tired, so I slept. Okay. I'm really sorry for that. Okay. I'm in short. Don't know. 9:23 to target one. Brother, I'm not. I'm not interested for. I mean, entry right now because entry is something you will understand. If you can just wait some more times, you will understand. Entry is nothing. So in monthly chart, you can see it came here. Okay, how it works? So actually, it is trying to go higher, but it shouldn't go higher. It should go lower. It has traded from here. I mean, the consequent encroachment. It went higher. It has taken the buy side liquidity. The buy side liquidity taken has done. Oh man, I'm getting confused. Then market came back to this fair value gap. It then last month. I mean, this month it started to go higher, but it should go lower. So that means it is going higher some specific level. If I mark this thing, this is the order block. It should stop over here. What did my order block went? It should stop over here. I mean, it should go lower. Let's go to the weekly chart. So it has made this relatively equal low and relatively equal low. This is the candle from last week. So it is trading over here. It can take the buy side liquidity. I mean, this high and this high, they are relatively equal high. So it can go little bit higher and it can take the buy side liquidity. I'm not sure, but it can do it. But it has to go down. This is the sell side liquidity from monthly chart and from weekly chart. It is very clean. It should have taken this sell side liquidity before. If it wants to go higher, it can go, but before that, it should go and take the sell side liquidity first. Let me go to the daily chart first. So it is trading over here. I mean, this week consequent encroachment. Let me check it. So this consequent encroachment is important. If it would like to go higher, it can go to the consequent encroachment first. And no, it shouldn't go higher at all. I mean, it shouldn't go higher at all because it has already traded this consequent encroachment of the highest week, and now it is over here. It should have traded this gap, I think. Guys, this is the first time after 3 years I am just watching this market. Okay, so don't think I will just mark everything in one at the first glance. Okay, just let me get little clear about the market. It is actually trading this fair value gap. I mean, this daily fair value gap. If I mark the consequent encroachment of this daily fair value gap, it shouldn't go higher. This is the consequent encroachment of this fair value gap. And please, nobody please frame your trade depending on my analysis. Okay, this is also a request. So this should be react like that way. I mean, it has done its, I mean, higher run. It should have done it. Now, if you mark this gap, this should be your breakaway gap. What it has to do is something like that. Let me just mark it. Okay, it has to do something like this, something like that. Okay, let me go to the 1 May on our chart. Yeah, it has traded the constant encroachment. Don't think it will go higher. I mean, when it will come back to this upper level, then it will go higher and take the buy side liquidity. It shouldn't work like that way. Instead of that, it has to go through this fair value gap and this daily I fair value gap, and then I want some reaction. It has happened over there. I want some reaction to the lower part. I mean, it will do something like that. This is my expectation, guys. I'm telling you again and again. This after 3 years, I have just opened this chart. I will expect something like this. I'm just thinking like that. Okay, let me go to the 15-minute chart. So from 15-minute chart, I can see it went higher. It has traded to, I mean, this all of this place it has traded, and now if it can break this low with energy, and you get some kind of fair value gap, then it will target this low. This is your sell side liquidity right now. This is your sell side liquidity. So I'll remove this one. I'm not watching your comments, so please, if you comment something, I will try to reply you later. Okay. It has cleared the buy side liquidity. It has traded the, I mean, the, what can I say, the water block. Now price is over here. This is the water block level. It shouldn't break this water block level. If it would like to break the water block level, then the consequent encroachment of this, I mean, this candle's consequent encroachment will be the highest level. I mean, price can go again one more time to that level. Okay, to that level, then it should break lower. That is my expectation from monthly chart. So I will see how it works over there. I would like to go to the Nasdaq first, and if any of you have opened that chart, please let me know later. Okay. Okay. So price didn't clear the buy side liquidity. Look how beautifully we have made this thing. Okay. Now where is our, I mean, liquidity? This is our liquidity, buy side liquidity. What time is it now? It's 9. I mean, just 9:29. We will wait until 9:30. I mean, if you took your end like that way, it should it should have worked like that way. But this is 9:30, so don't be ridiculous, because you will see so many volatility at 9:30. Don't think it will work or something like that. It can easily go to the, I mean, the lower fair value gap. But my expectation is it will go higher. It will take the buy side liquidity. That should happen. Okay, so I am in short. Okay, is there a mean threshold or a CE of breaker? For bearish breaker, yeah, breaker has the consequent encroachment, but I mean the mean threshold. Uh, but it is kind of, you have to utilize that with the fair value gap. Okay, I mean breaker consequent encroachment is little different thing. It is related with the fair value gap. It is not self-dependent, something like that. Like mean threshold of order block, it is self-dependent. It doesn't need to match with any other things. But for breaker, it needs fair value gap for being more strong. Thanks for gold. You are most welcome. Shush boy. Shush boy. So I want to see how reacts. I mean how the price reacts over here. This buy side liquidity is now the most obvious place. I mean price should react over there. I mean it should clear the buy side liquidity. And look at the consolidation at 9:30. See how it, I mean it went higher and it went lower. This is the thing. If you look at the price over here right now, what we did, what we were waiting for, we are waiting for this buy side liquidity. If we say before 9:30 it didn't take the liquidity, we have taken this sell side liquidity, then this market structure shift, or if you just mark this market structure shift, let me just mark this market structure shift, then this is your only fair value gap. Now at 9:30, you will wait for the price how it work over there, because you will have some kind of reaction over there. After 9:30 you will see this type of run. Why I am telling you not to take entry before 9:30? Because you don't know how it will work over there. If you take your entry over there, I mean, just let me put it over here, okay? Where is your most obvious I mean stop loss? It should be below this low. That should be your most obvious stop loss, and this should be your most obvious target profit. But at 9:30 sometimes you will see you will be stopped out. Why? Because there is a very little small fair value gap. So if you take your entry before 9:30, you have to put your stop loss here. You have to put it over here. You have to be careful about this little small fair value gap. That means the volatility can send the price to this fair value gap, then it can go higher. But it will go higher, that is obvious. That is obvious. Why? Because we have the buy side liquidity. Now where price is heading? To this fair value gap. All of you remember this is the 15-minute fair value gap. Price is going over there. Also there is 15-minute fair value gap. I mean this one. I am expecting that price will go to this 15-minute fair value gap from before. I mean from here. I want to see that. Okay, that price will go over there. So do you understand the price action? Why you need to read the price action? What we did over here, we were just reading the price. All of us were reading the price from here to here. What price is doing. When price came here, what I was telling you, if I see before 9:30, if it isn't clear yet, then we will look for some kind of entry at 9:30 or maybe 9:31. Okay, if you see any kind of entry setup, I mean there's two type of entry. I love this one, 22 YT model, but there is also the, I mean the fair value gap entry. If you want to take that on, that is also important, I mean easy. Okay, it is over here. So all of you guys just mark the constant question. This is the first thing you have to do. Just mark the constant question of this 15-minute fair value gap. So when I saw market didn't clean the buy side liquidity before 9:30, and there is very nice fair value gap, also very small fair value gap, you will take your entry over there at 9:30 or just before the 9:30. Sometimes you will be, I mean, stopped out. If you try to take entry at 9:30 opening, you will be stopped out. To be honest, you will be stopped out. I stopped out so many times at 9:30 for because of the volatility. But if you take the risk, it is okay. I mean, low lot, little bit bigger stop loss. Okay, then it will be safer, and then you can see the run. So all of these are fake run, guys. Remember, after 9:30, if you see this kind of run, this is the fake run. In as per ICT, this is the Judas swing. Sometimes you will see price just do some type of consolidate, then it went higher, something like that. If you see that type of run after 9:30, you will understand that we are getting the Judas swing until 10. I mean 9:30 to 10. But if you see this type of run after 9:30, that is your Judas swing. I will just remove this buy side liquidity and I will go to 5-minute chart because I have a very small monitor. I will see where is my liquidity now. Okay. Look, price is over here. See this liquidity. Look at this sell side liquidity now. This is the most obvious place where price will come. The most obvious place. Okay. I'm expecting that market will come here. That is my expectation. And I will see how it react over here. I mean this 15-minute fair value gap. Also there is a very nice 15-minute fair value gap over here. You can mark them, mark this as well. I'll mark it here. I'll mark it as well. I will look now. Now we don't have any kind of entry. Okay, we are not looking for entry. Now is the time for read the price. We will read the price now. How it will react from there, and when we will get some kind of reaction that market would like to go lower, then we will look for entry. This is the power of price action, guys. So Is there a mean threshold? Okay, I gave you the answer. Open heart mystery. Good boy, thanks for gold. You are most welcome. Is there any difference with CE and mean threshold? Okay, if you mark the mean threshold, you have to mark it for order block and the breaker block. Okay, also proportion block. Yeah, also the proportion block. Any kind of order block, and then the breaker block or proportion block. If you mark the 50%, that will be the mean threshold. And if you mark the fair value gap, any kind of fair value gap, the middle is the consequent cost. What is your question? If you say expecting the sell side liquidity to be taken and price is in the upper fair value gap, will you be looking for in that fair value gap now to take you sell? Now I have no, I mean, now I'm not looking for sell. Now is the time for reading price. We were reading price over here for entry. Now is the time for reading price. How it react over here. I have this fair value gap from previous price action. This is all the breakaway gap, and I have this 15-minute fair value. Look how I read the price. Now price is over here, so I mark this two level. If price go higher, I will mark some kind. I will mark this fair value gap. Okay, this is the fair value gap. I will mark this fair value gap as well. If I see price went more higher, I will mark this buy side liquidity. When price will go higher, I will continue to mark some level above the price. If I see price react from here and it can break lower, you all know what is the requirement. The consequent encroachment rejecting, nobody close above the consequent encroachment, something like that. And then it came lower little bit, then it went back to the, I mean, this fair value gap. Then I will start to look for sell. This is my sell side liquidity. So far, you have to understand after 9:30, if you see this kind of swing, this kind of run, most of the time that is the Judas swing. I'm not telling you 100% of the time, but 90% time that is the Judas swing. The fake run. This run actually triggered all the what happened? Oh man, my laptop is not charging. Let me just connect my charger. Mm-hmm. Just a second, guys. So I was here. More all of the what I mean, all of the people are already triggered. They took their buy. This is their target. This high is their target. We didn't take our buy. We will start to read the price, how it reacts from this fair value gap. This is the first fair value gap. We have a very small fair value gap over there from 15 minute chart, but in my opinion, that should be work as a breakaway gap. That shouldn't be traded. Okay, so price should react from there and it should go lower. That should happen. Okay, I will just mark the opening gap. Okay, this is my opening gap, and I will remove this little 50-minute fair value gap. So that is my opening gap. I'll go to 1 minute chart now and electronic. All done. Okay. So look at the price where it did go to the top of this 50-minute fair value gap. Now where is the price? It is over here. Where is your level? You have now three levels. One is consequent encroachment. Above the price you have consequent encroachment. Below the price you have this low. You have to look how it these two level work. When it will go through this consequent encroachment, you have to look the upper level and the consequent encroachment, how it will work. If this high can hold the price and this low is consistently broken, you will expect price will go lower. This is fake breakout. Don't think it closed below the consequent encroachment, because the very next candle it went higher and it's gonna close over here. So this is a fake breakout. This has no value. You have to look the price right now, how it reacts. I will remove this one because this fair value gap is working very well. I mean, the level is actually respecting better than the 15-minute breaker block. I mean, breaker fair value gap. That's I just remove that one. I will say how it works over here. Okay. Okay, it's very clear. Do you struggle right? See the yeah. I struggle. I mean the right regular trading hour, because it's easier, brother. If you just toggle the regular trading hour, it's easier to see the opening gap. Okay. You can do that. And if you go to the electronic again, then this one. Now look at over here, what price is telling you. Do you have any idea where price will go? You have no idea. Until now you can see that it respected from the higher part of the 15-minute fair value gap, and this consequent encroachment has no value yet. We don't have any kind of entry setup over here. We are reading price right now. If it can break the lower part of this 15-minute fair value gap, if it can close below the 15-minute fair value gap low, then we will see how it react from the consequent encroachment. Then you all of you know how to set up. I mean, setup happen. How setup happen? Okay, everything is gonna be easier for you guys as well, for me as well, to give you the information. But if you don't mark every level, like I have marked this 15-minute fair value gap, I have marked this opening gap, I have marked new week opening gap, high low, consequent encroachment, and also the sell side liquidity. I have only marked all of this level. Now if you don't mark all of them, you are just wasting your time. I am telling you, if you think I'm rude, I'm rude, no problem, I don't mind. But if you don't mark all of them in your chart, you are just wasting your time. You are just giving me views, you are giving me hours, you are giving me them, but you are just wasting your time. I don't need your views, I don't need your hours. I need you to learn something from here. Please don't waste your time. This is a request. Go to your chart, mark every level what I have marked, because this is all now important, and this is how you will understand. Look, if you have the chart like that way, I mean your chart is like that way, you don't know where price went. You don't know where price is right now. You know nothing. So please mark the level I have marked. That will be easier for me to I mean to tell you how to react. Okay. Now look at this fair value gap. This is the lowest fair value gap. Okay. If price can hold, I mean this fair value gap can hold the price to send it higher. This is the last stage. Try to understand how I read the price. After this big run, when price started to come lower, there was one fair value gap. It didn't respect this fair value gap. It went through this fair value gap, and now this is the last fair value gap. Look at this big run. There is no fair value gap below this fair value gap. So if this fair value gap can hold the price and send it back to the higher, that is the thing I am now watching. If it fails to hold the price, instead of that it went through the this fair value gap, then I will start to look for sell. I mean, nobody please press any kind of paper money as well. I mean, no paper money, no real money, nothing. You are just learning how to read the price. If this fair value gap can hold the price and send it back to its pavilion, it's okay. I will need more information. But if it fails to hold the price, instead of that price will go through this fair value gap, I will start to look for a sell, and all of you know how I look for sell. All of you know. Okay, this is the thing I will look for if it breaks. Is it clear, guys? Now you can ask me, brother, then why this 15-minute fair value gap you are looking for. This is the breakaway gap. I mean, this is the gap above the buy side liquidity. I mean, above the buy side liquidity, this is the inefficient place which can hold the price. So it has done its job. It has hold the price and send it lower. Now, this is the last fair value gap which can hold the price and it can send it back to the, I mean, higher, back to the moon again. But if it fails, then I will start to look for a entry. Either it can be this entry or it can be any kind of 22 YT model, whatever. I will look for the entry over there. Okay. Is my voice clear, brother? I mean, loud enough, or I mean, you guys can understand my voice? Is it better than before? Is this not a block order for 1500? 1500 block order. 1500. Why is it? Thank you, David. Sound is much better now. Thank you, brother. Thank you, Steve. I don't know. I mean, Igor, what are you talking about? I mean, what is block order? I mean, what is block order? And in 1500, I don't see anything. I mean, which time frame? Can you please tell me little more? Um, sorry, 15300. Okay, now 15300. Where is 15300? 300. Okay, here. Should I go any other time frame? 15300. Okay, the thing is, brother Igor, I really don't want to talk about order block. I have already, I think you are new. I mean, today is your first day. I think, I'm not sure because I didn't see your name before. But I really don't talk about order block. I mean, how it happens, how it works. It is because Michael told that he will disclose the order block in his book. Okay, so I want to respect his, uh, I mean, I think you will understand. I really don't want to talk about order block. Okay, in my opinion, fair value gap is 100% self-dependent. I mean, if you understand how this fair value gap works, you will need nothing else. No order block, no breaker block, nothing. But after that, I will talk about breaker block. After, I mean, when you guys will understand this fair value gap clearly, I will start to talk about breaker. But I will not. I mean, 80% of the people from here won't be there when you guys will understand how this fair value gap works, because you will start to do the live trade and you will have no time to spend with me. And it's true. Okay. I know it's true. So see, so far I can see this fair value gap is actually this fair value gap is respecting. I mean, it is holding the price, but I want to see that it will go through this fair value gap and then it will be rejected from the consequent encroachment. Then when it will come back to the lower part of this fair value gap, that is a very good opportunity to sell. Okay. And one more thing is, it's very near to the macro, so you have to keep it on your mind that we are already inside the macro. Okay. So I will see how it works in macro as well. I mean, so far this is the macro 950. I want to see that it will go higher than this high, so that it will take the buy side liquidity. Then I will need a very nice market structure shift to the lower portion. That will be a best opportunity. I'll see how it works. Okay, macro. So many times I told you that I won't talk about macro anymore, but still I'm talking about macro. Oh man. 1 minute, bro. Sorry. Okay, no problem. Igor, I didn't understand that you were asking about order block. I really don't like to talk about order block. It's kind of, what can I say? I have to just skip the order block, brother. I'm really sorry, brother. Market respecting the last fair value gap. Yeah, it's respecting the last fair value gap, but this is the thing I'm telling you that it will act as a I fair value gap. Just write it down. Just give me some more time, and I will show you that the price will go through this fair value gap. Then this fair value gap will be used as the I fair value gap. Okay. So it closed below CE of 15-minute fair value gap and closed below the bottom of the fair value gap. Now anticipate a retouch of the bottom for sell targeting sell side liquidity, or is this too early? It is early, brother. The thing is, you won't, I mean, you won't use this fair value gap as your entry setup. You are using this fair value gap for holding the price. That means you see the run, the very strong run. So there should be something which will hold the price. It can be a water block, it can be a breaker block, it can be a fair value gap, whatever it is, it will hold the price. And now you can see this fair value gap has hold the price. Now it hold the price and send it back over here. Where? To the lowest fair value gap. Now I mean, we will look for entry by using this fair value gap. Okay, I think it is clear. I mean, I don't know it is clear or not, but we will look for entry when this one will be broken, because this is the breakaway gap. If you see, this is the last fair value gap. Most of the time, the last fair value gap act as a breakaway gap. So if I see market actually went higher again and it has taken the buy side liquidity, I have nothing to do. And to be honest, I have nothing to do. But if I see market went, maybe it has taken some liquidity, it will take some liquidity in my opinion, because this is inside the macro, and I would like to show you the macro again one more time, and then I will show you how you will anticipate your entry. Okay, nobody will press any kind of button. If you press it, you will take the loss, because I will put my stop loss some place where it won't work. I will be stopped out. So please, this is a request. Nobody please hold, I mean, press the button. Not even for the paper money. This is the request. I think open heart. It is clear, brother. Let me know it is clear or not. Okay. Love macro. Yeah, I love to. Igor, I told you, brother. I really don't want to talk about. I mean, for the order block. Okay. I'm really sorry, brother. Please do go through the macro as we are live, not the whole session, but something to see live. Yeah. Oh, no problem. I will go. In my opinion, it has already taken some kind of buy side liquidity. Okay, but I will wait for more information. You see this swing high, it has taken the this swing high, it has taken the buy side liquidity already. But I was expecting that it will take this high, I mean this high, but it take the this swing high. Also it has taken the buy side liquidity so far, but there is no sell side liquidity. I mean, this low is the lowest low where is sell side resides. Okay, there is no other. Now if this candle close above, no, it has already closed I mean it went lower than this low, so we don't have any sell side liquidity until it's taken. We have already taken the buy side liquidity, but I really want to see market will go higher. It will take the buy side, whole buy side liquidity. Let me just mark the buy side liquidity. This is my expectation. This is the buy side liquidity. But if you think closely, I mean if you see closely, it has already taken this buy side liquidity. This swing high, it has taken by that swing high. I want to see market will go above this buy side liquidity. That is my expectation. Okay, I will see how it works. Don't worry, I'm with you today. If the market doesn't break under and decide to go above, then what is your initial target in upside? I have no target. If it would like to go higher, I have no target. I will just, I mean, just I will let the morning session go. I won't take any kind of entry. because if it would like to go higher, you don't know where it will go. There is no level where you can be sure that price will hold. Okay, so because why I won't take entry for the morning session, because from yesterday's price action, I mean yesterday's analysis, we all know that market will go lower. But if it would like to go higher, then we don't know where it will go. That's why I have no trade. Now you can see it has taken the buy side liquidity again. I mean the extreme buy side. Now I need a market structure shift to the lower part. Okay, that is the most obvious thing it should do right now. And this is macro. We all of you know it has no relation with any kind of price action. I mean no higher time frame price action, nothing. And I'm telling you guys again, nobody please press the button. If you press the button, you will take a loss. I promise you, you will take the loss. If the market doesn't have, can you give us a diagrams explanation if you want to use the 22 YT model to enter in the last parallel effect as explained? Brother, diagram things is difficult. I mean, I'm not that kind of person. I mean, I have very little patience. I rarely manage my time for you guys. Trust me. All of you know that my father had died last year, so many family responsibilities. I can't spend much time. I'm really sorry for that. But if you tell me something to do except I'm doing, that will be very difficult for me. And I can tell you that I won't be able to do that, brother. I'm really sorry for that. But any of you guys can do some kind of things, and it, if you give me that, I can check them. Okay, I mean I can check them. Okay, kind of clear, but it looks like it did work. It looked like it did work. It's because I'm telling you that this sales and liquidity is very clean, and we didn't get any kind of rejection from the consequent encroachment yet. This is in the macro already. So all of these things actually looking, I mean, it look like it will work. But trust me, brother, most of the time you will see it doesn't work. Most of the time you will be stopped out. I mean, you guys just, I mean, you can check. Yeah, I mean, backtest it. Okay. So I'm telling you that you shouldn't take your entry. That's why you won't take entry. I don't want that. I want you to do homework. I mean, you should check first and then let me know, brother, it works. I will learn as well. So if it went higher, will you take a buy? I mean, if you say some kind of uh, fair value gap over there or something, will you take the buy over there? I won't take my buy because it didn't take any kind of sell side liquidity yet. No sell side has taken. So if it went higher, please don't take buy. So that is the rule, okay? And yeah, macro is the heart of your trading. No man, hence I told you that I don't trade macro. Even I think it's for under 18 people. I mean, who are the laziest people? I mean, doesn't want to do anything. This macro is for them. I really don't like macro. Maybe it is creating relative equal highs. Yeah, maybe. Let's see what happens. But please don't take any kind of buy because it hasn't taken any kind of liquidity yet. It is going like, look, here is your fair value gap. Now what do you think? You will take your entry over there? It's out of rules. If it went higher, clean the buy side liquidity, maybe you will miss this macro. I don't care. It didn't match any rule. It didn't take what it is. I don't know. Okay, it didn't take any kind of sell side liquidity. No sell side has taken. So this is not your setup. Don't think this is your setup. If it went higher, let it go. No problem. We will see the next macro. No worries. Maybe it's getting little. Sorry to hear. Oh, Julian, it's okay, brother. I really respect Allah's decision because Allah knows everything. I'm happy for my father. He was a very good man. It's okay, brother. Mystic, thank you, brother. No problem. From C and one of available and one of available. David, it reverts from CE of 1 hour fair value. Brother, I'm just not showing you the 1 hour fair value gap. I'm showing you 15 minute, and I told you that 15-minute fair value gap is, I mean, 15-minute chart is kind of chart where you will get weekly candle. I mean, all of this candle represent your weekly candle from 15-minute chart. Okay, that's why I really love 15-minute chart. And you see this fair value gap, it's from 15 minutes, and that is the thing. Actually, I love 15 minute, but if you think hourly fair value gap works better for you, you can you can check that. Okay, now guys, what do you think? You will take your entry over there to this fair value gap for macro. Okay, I'm talking about macro, not other things. Will you take your entry over there? No, I won't take my entry over there. Why? Because when price came into the macro, it didn't take any kind of sell side liquidity, no sell side liquidity. So for now, we have seen that it has taken the buy side liquidity, only the buy side liquidity. Just forget about anything else. I mean, the higher time frame analysis, this 15-minute fair value gap, everything. Just forget about everything. Just watch the price. It has taken the buy side liquidity, just buy side liquidity, nothing else. Now it is trading over here. Don't take your entry over there. Maybe price will go higher and it will take the buy side liquidity from there. I don't care. I will miss this trade, no problem. But I won't go against my rules. If you go against it, you will take more losses than profits. Okay? Is it clear? Hello, bro. For me, I think there was not need for MSS because after price uh, trade that CE and reject, you can enter already and target upside CE. Uh, from here, I think you are talking from here. Yes, brother, you can do it, but that is gambling. In my opinion, that is gambling. It's because you don't know price. This fair value gap will hold the price or not. How do you know that this fair value gap will hold the price? I have no idea. How can I know? I mean, if you have any explanation, you can tell me. Okay. Now I have got my market structure shift. Look at over here. This is the shift in market structure. Okay, I'll just remove this one. This is my shift in market structure. If I have seen any kind of fair value gap over here, I will go for short. If there is any fair value gap here, okay, I will go for short. If no fair value gap, no trade. It's simple. Is this a drawing? Is juice a drawing? What does it mean, brother? Juice. Juice. What does it mean? I don't know. Like you draw the other entry you did just now. Is price saying I don't want to go higher? Yeah, price is telling me that I don't want to go higher, because you see it went little bit higher and very next candle it went lower again. I mean the consequent encroachment. It means it is a fake breakout, and it is telling me that I don't want to go higher. And now this market structure shift is not valid because I don't have the fair value gap. This is for macro, okay? I'm talking about only macro, nothing else. So this fair value gap, there is no fair value gap, so this market structure shift is not valid. So far I have, I mean, it has taken the buy side liquidity and it has taken the sell side liquidity as well. You see this one, this is your sell side liquidity taken. Okay, now if you see this candle go above this highs, I mean it is relatively equal high, though I shouldn't mark this one as my, oh, no, okay, just leave it. Okay, because this is not swing high. Is that for my internet again? Oh man. Okay, so look at this highs. Okay, I can assume that this is high, but I mean this is not high, so I shouldn't take the risk. But I'm thinking that if you see there is a high, Okay, if you see that, just assume this is a high, swing high, okay, and this is your market structure shift. If you get any fair value gap, then it would be a perfect setup for buy. But this is not swing high. In my opinion, this is relatively equal highs. So this is not your market structure shift yet. It has cleaned the buy side liquidity again. So far, it has taken the buy side liquidity actually. Well, what you need now, you need a nice market structure shift. Is this low is eligible for shifting market structure? No, not yet. I need a swing high here first. I need a swing high, okay? Then it will be eligible for market structure shift. Until then, it won't be eligible for shifting market structure. And I have only 3 minutes left. In my opinion, maybe today's morning we have no trade or no macro trade, okay? But so far, actually, price is telling us I don't want to go higher. You see how beautifully it's reacted from there. I mean, from this consequent encroachment. Now you can. This is for you, brother, or open heart ministry, because your name it's very difficult for me to pronounce. So I'm just using that on brother. Now, if you look at your the chart, if it can go lower and it trade the lower part of this fair value gap now, you can take a risk. Okay, you can take it now because it is rejected. It has rejected from the consequent encroachment. But look at the price over here. It didn't tell me that where it would like to go, but now it is telling me I don't want to go higher, brother. Please don't try to take any kind of buy. I would like to go lower. Now it is telling me that, but here it didn't tell me anything. So it has broken the lower part of this fair value gap, but it wasn't clear from here. But now it is clear from here. Now if it can break lower and retest the low, then only then you can you can take your entry. Now look at the price. Now this swing low is valid for market structure shift. This is a valid market structure shift. Why? I have a a swing low here and here. Both of them are lower than this swing low. Okay, so this market is this swing low is eligible for shifting market structure. Very next candle, the last candle of the macro, if it can go through this low with a fair value gap, that will be our entry. Entry. Okay, that will be our entry. Until then, there is no entry. Now this candle, if it can break through this market, this low, that will be our entry. If it failed, then we have nothing to do. Okay, we will wait for more price action. And if you look at over here, I would like to show you the thing as well. Look, it has taken the sell side liquidity. It has given you the market structure shift over here. If it can make the fair value gap over here, you can take your buy. This is for macro only. I'm telling you, this is for macro, nothing else. This is your market structure shift because this is the highest high. There is no high higher than this high. Do you get my point? I had the sell side liquidity taken from here, but I didn't mark this swing high because that was the relatively equal high. That wasn't, I mean, the swing high. But here is my swing high, which is the highest high. I don't need any kind of requirement to make it as my market structure shift eligible market structure shift swing high. And then I have got this market structure shift inside the macro. This candle is the 10-10 candle. So it has made the uh, market structure shift. Then I have got this fair value gap. If price can come to this fair value gap, then my target will be 20 handle. So that is actually your macro trading. Now I will wait for next 4 to 5 minutes, and if this high is already taken, then this fair value gap is not valid. Okay, this is not valid anymore. This is not valid anymore because it has taken the buy side liquidity already. And actually price didn't give us the opportunity to take our entry because this candle never came to this level. I will go and check the imminent now. Was there any entry setup or not? Okay, so here we had the, what time is it now? No, there was nothing as well. I mean, after here, nothing. Till now here was nothing in imminent as well. We'll see the next entry. Now, Darius, this is for you, brother. You remember you told me that you will sell here. What happened? If you sold here, you will take a loss. I was expecting that market was rejecting from here. That's why I was expecting if it can break this low, then if it can come back over here, I will take my entry. Now, one of my brother he told me that we can take our entry over there and then we can. I mean, you told me like this way. I'm telling you why this is not also acceptable for me. This is my expectation. I'm not telling you that you are wrong or right, okay? Because you don't know this. I mean, this fair value gap will hold the price. How do you know that this will hold the price? This is pure gambling. If you don't understand the reason hold the price, why this fair value gap will hold the price, you are gambling. And gambling is something. Sometimes you will be right, sometimes you will be wrong. So we are not gambling here. We are just reading the price. We were expecting some kind of pure price action like here before 9:30, but we didn't get it here. So what will we do? We will do nothing. And I told you about macro that it has taken the buy side liquidity. Then I told you that it has taken sell side liquidity. This is not my market structure shift, that's why I didn't mark it. And then later when I have seen this, I marked it, and I had put my, I mean, the trade over here, but market never came here. Instead of that, it went higher. I told you so many times that macro is totally different. It doesn't need to be, I mean, connected with anything else. No higher time price action, nothing. Just 1 minute 20 candle. That will be your trade. Okay. So macro is different. I'm not talking about macro over here. I've already made the videos for macro in my playlist. You will go over there and check. You can check over there. I mean, you can check the macros from there. And I have shown maybe nearly 2 weeks every day, every session macro over there. So far, I don't remember how many winning were over there. Uh, Tell me you didn't take the buy entry, bro. That was real as a day. That's how you enter without MSL after price reject close above CE already. Brother, I told you if you trade the macro, just forget about everything. No fair value gap, no breaker block, no higher time frame, no daily time frame, no buy side liquidity taken, nothing. Just forget everything. Macro is self-dependent. Whenever you will be inside the macro, you have to forget everything if you trade the macro. Okay, I'm telling, if you trade the macro, you have to forget everything. You see, I put my entry over there, and I put my stop loss maybe somewhere here, I don't remember, and then 20 or just leave it. If this candle would came to this fair value gap, that would be your winning trade. That would be your winning trade, because macro is self dependent. It doesn't need to depend on anyone. Okay, now so far I can see it has taken the buy side liquidity from here. If you look at the price, it has taken the buy side liquidity. I am expecting the lower price. Okay, I'm not expecting the higher price. You see this candle closed above this fair value gap, and the very next candle it went lower and closed inside this fair value gap. Then it is trying to go higher again. I will read the price now, how it will react. If it wants to go higher, I have nothing to do. I will wait. I have nothing to do. Trust me, guys. This is how you will anticipate how you will take your entry. Okay, because if you think your price will go lower, and when you will start to see prices going higher, you will try to take some kind of buy. You will you have already started to take losing trade. I mean, to do some kind of gambling. I am telling you again and again and again, don't gamble. Try to read the price first. When price was over here, what I told you, if it can break the fair value gap, then I can, if I can see some kind of rejection from the consequent encroachment, then little rejection, lower, I mean lower per trade, we will take our sell. Now, what I told over here, when I have seen this candle, this was the fake breakout, then these two candles rejected from the consequent encroachment. If price could break the low, it gave me some kind of reaction lower. Then if it can go back to this low part, I would take myself. Maybe my target would be here, maybe a very small target, or maybe here. That is different matter, okay? But right now, if you say it would like to go higher, do you know where it will go? Let me go to the hourly chart. Do you know it will go above this high? What do you think? It will go above this high or the here? Where it will stop? Where it will stop? This is my question. Where it will stop? From higher time frame, you know price should go lower. This is the clean sell side liquidity. How do you know where price will go? So what you have to do, you have to wait for some kind of lower reaction. I mean, this is a very good run. You are going to miss this run. Don't be afraid of missing trade. You will get so many setup, brother. Trust me. So far, we can see it has actually taken the buy side liquidity. It went above the buy side liquidity again. Now, I'm expecting lower price, so I will. I want to see some kind of reaction to the lower. I mean, if I see very big run to the lower portion and very nice market structure shift with a very nice fair value gap, that will be my 22 YT model. I will go with the 22 YT model. Also, if it come back to this fair value gap, that will also very, some kind of confidence that market really doesn't want to go higher. Till now, it is telling that I would like to go higher. Till now, but if you see some kind of market structure shift, very nice market structure shift with the fair value gap, maybe you will wait until it break the consequent encroachment if you are more conservative, or if you are ready to take some kind of loss, you can take the entry over there if it gives you the chance for the 22 YT model. Okay, just as you want to go higher and you wait to the very next candle to trade the breakaway gap and you enter. Is that right? Yeah, that's the thing, brother. I used to take that entry to the last parallel, but you have make me to understand with pure logic of is a gambling INT. Agree. Yeah, thank you, brother, for understanding. Because some of you guys can think that why didn't I take my entry over there? Because this is very clean, right? It has taken the maybe sell side liquidity. No, it didn't take the sell side liquidity, but this is a very good run, and this is the lowest parallel gap. Why I don't take my entry over there? I explained why you don't take your entry over there, because this is gambling, brother. I don't want to teach you some kind of gambling. I I'm trying to give you some kind of, I mean, some direction so that you can read the price. If you know when should we take the entry, we should take our entry when this parallel gap will be broken. Then the that would be the best opportunity for taking entry. If we would see some kind of reaction from here, we would take our entry from there. But this is just a fair value gap. How do you know this will hold the price? How do you know? Just let me know, brother. How do you know this will hold the price? There is no option, no chance to understand that. Yeah, you can tell me something like that. When it has rejected from the consequent encroachment to reject over there and then came back again to the upper level of this fair value gap, you could take your entry over there. I mean, depending on the fair value gap explanation. But that is also not under the price action. First, you have to understand the price. Why it will go lower? Why it will go higher? When you will understand the thing why, then you will understand when you should take your entry, when you should avoid your entry, when you will let some kind of run. I mean, it will let it go. And even you don't care about that. So far, if you knew you could take your entry over there, why it is just moving again and again? You could take your entry over there. Maybe if macro worked, then you could take your entry over there. I mean, if it worked, it didn't came to this fair value gap, but if it could work, it went. Now it is going higher. What will I do? I will go to the hourly chart because I don't have enough information over here. I don't need this one anymore. I don't need that 15-minute fair value gap anymore. I will just mark this I fair value gap from hourly chart. Okay. I have the consequent enforcement. That's better. Thanks, brother. Again, thank you for your help. I don't need to mark the consequent encroachment anymore. I'll go to one on mid chart again. Okay? Now I will look for this hourly fair value, how it works over there. See, I just removed the 50-minute chart. I don't need that chart anymore. I am expecting lower price. If it wants to go higher, if it go through this hourly fair value gap, if it went came here somewhere, I mean, just let me show you. Mm, mm. If price came here, I don't care. I won't take any entry over here. No buy here. Why? Because above me there is no clear sales, I mean liquidity. I mean, first thing first, if you didn't see any kind of liquidity above you, I mean relative equal high, relative equal low, whatever, if you don't see that, don't go into the entry. I mean, don't take entry, please guys. This is very important. Do you see any buy side liquidity, I mean clear equal highs or equal lows over here? Do you have anything here? Let me show you. Is there any equal highs, anything? I mean, that is most obvious. Market will go over there. Can you see that? If you don't see that, don't take buy. If you look at over here, is it clear? I mean, this low, isn't it clear? Isn't it clear drawn liquidity? You will look for short. Don't look for buy. This is the first rule. Always I am telling you this. First, you have to mark the liquidity. Liquidity is everything. Fair value gap is the place where price will hold. I mean, if price will go lower, it will clean the sell side liquidity, then it will try to find some kind of imbalance where it will be hold. That fair value gap or order block, whatever, it will hold the price. Maybe it will send back to the pavilion again, to the moon again. But sell side liquidity, why price will come here to take this sell side liquidity? It will hold in imbalance, but it will go here, it will come here to take the sell side liquidity. Now you can ask me, brother, then why price is going higher now? It is going higher because it is retracing. I mean, there is the imbalance. Okay, you remember it has cleaned the buy side liquidity from here. That was the very clean buy side. This high, this high, this high, this high, all of these highs had made the very clean buy side liquidity. After cleaning the buy side liquidity, it went higher to the 15-minute chart. It came lower, retraced from this fair value gap. Now it is in this imbalance. Now this is kind of manipulation, I mean the accumulation phase, which you will understand when you will look at the price after, I mean the, why this one is moving again? I mean, what the, when this today will closed, you will understand what it has done today. Okay, I will show it to you. I will tweet it, I mean the screenshot after closing, I mean after today. Okay, I mean the Monday, after Monday I will show you the screenshot what it has done today. You will understand then. It will take little time. Okay, so far I'm watching this hourly fair value gap. I mean, this hourly fair value gap for 15 minutes, brother. From where I have marked it. Yeah, from hourly chart. But 15-minute also there is a very nice fair value gap. I mean the breakaway gap. You see, this is the last. I mean, look at over here. I mean, I will just refine it. Okay? Because that is more logical for me. So you see this run. After this done, there was two fair value gap. One, two. So the lower one should be breakaway gap. Now, if price can go to the consequent encroachment and reject from there, let me go to the 1 minute chart. If it rejected from the consequent encroachment, it can go little lower and it will come back to the upper part, I mean lower part of this fair value gap. I will take my shot. If it went through this fair value gap, I have nothing to do. So many price action I told. Now it's time for some something. Just tell me something. Do you guys, I mean, do you get something here? I mean, new, or you are just thinking you are wasting your time? Just let me know. I mean, I need some feedback, guys. It's very important. And I think Stephen is not here, because if Stephen was here, then he would write it down. Guys, please like, share something. Yeah, if you are new, I mean, very new to my channel, and you are just listening to my, I mean, boring lecture. Uh, if you think it's little bit helpful for you, you can subscribe to my channel, and please press a love button or like button, something like that. It will be easier for me. I mean, it is easier for YouTube algorithm or something, so that more people will know about this streaming. If it is possible, please share the link, something. You can do it. I'm not telling you to do it, but I think that will be little help for me. I'm also a help seeker. So I don't know. My English is broken. I know. I know. It's very boring. I'm broken. Igor, thank you, brother. Really, if you guys can learn the logic, I'll be satisfied. I mean, that is my intention, so that you guys can understand why we sometimes, Michael, I mean the ICT, sometimes he doesn't take entry. Instead of that, he just let it go. And why sometimes he take entry where we don't see any kind of entry. What is the reason for that? Okay, this is the reason, because he reads the price first. You don't see any buy side over here. That is much more cleaner. Okay, why you will take your buy? How do you know where price will go, from where it will retrace? You don't know. But if you look for the sell side, you have very nice clean sell side liquidity over here. You have also the sell side liquidity from here. You have some, I mean, yeah, just leave it. But you have also the sell side liquidity from here. Okay, so you have sell side, but you don't have buy side. You shouldn't gamble for buy side. So it was a very nice run. Maybe you have missed this run. Do you care? I don't care. I will find another entry. I will take another entry. I will take some more profit from that entry. I don't care about, I mean, missing this trade. But if you take your entry over there, how do you know that price, this gap won't will hold the price and send it back over there? You have no idea. That is pure gambling. Maybe this time it hold the price. What happened if it doesn't help? I mean, hold the price next time. You will take your loss, and you will start to think why it doesn't work. The reason is that, okay, so it went through this fair value gap. I will wait. I mean, right now, if you tell me to mark every level, that will be very, disgusting for me, because what I do in that case, actually, when it went through the first 50-minute fair value gap, do you remember the first 50-minute fair value gap? I just let price go, and I will reopen my chart later, and I will see from where it started to retrace. Okay, I mean, I don't want to take my entry from the top. Do you understand, guys? From the top, I don't want to take my entry. I would like to see where it will retrace. I mean, when the retracement will happen, I will take my. You see this candle? I want to keep price inside this candle. I want to see price will, it will be inside this candle. Inside this candle, okay? Uh, it shouldn't go above. I mean, outside of this candle. Yeah, it can go little higher, and it can take the buy side liquidity from there. It can do it, but immediately it has to come back to this range. because today is Monday. It should be the range bound. This is your first expectation. Let me go to the dollar. Okay, from dollar, if you were from the beginning, I told you it will be inside this candle. Yeah, it can go to this daily fair value gap, maybe little lower than that low, but immediately it has to go back inside the range. That is my expectation. So this is kind of range bound. Okay, I mean the range bound. In Tuesday we expect some kind of manipulation. That means it will go above the high and it will try to go below the low of the previous day's candle. Okay, that things happens most of the time in Tuesday. So if you didn't actually watch that video, you guys can check that out. I marked it how price act every day, something like that. You will find that in my YouTube, but you can check that. Okay. I mean, I'm so tired. I mean, how come you didn't mark the big table hourly chart? Learning a lot. Helpful. Okay, Rahul Thakur, thank you, brother. George Camera, thank you, brother. I will go to the 1 hour chart. Now you ask me a question that is valuable. Let me go over there. You are asking about this big fair value gap, right? Let me tell you the reason. You see, this is the fair value gap. What do you think? This is the fair value gap? No, this is not kind of fair value gap. Fair value gap is something like that. This is fair value gap. This is not fair value gap. I mean, in my opinion, this is kind of I mean, sell side imbalance, buy side inefficiency. Okay. Yeah, I know this is also fair value gap, but specifically this is sell side imbalance, buy side inefficiency. You can't utilize this fair value gap like others. Uh, it will take time, brother. I mean, now if I tell you, you won't understand. It will take time. Instead of that, I have marked this fair value gap. You see the very little fair value gap. That is I fair value gap actually. So I marked it. Instead of that, I think in 15 minutes that I have marked it. Yep. From there, I have actually marked it from there. And if you see, it has traded this fair value gap and also the order block level. Let me just mark the order block. This is the order block, and don't think the open. I always love to mark the opening, but this whole area is order block. Whole area is order block. Okay, this is the order block, and went through this 15-minute fair value gap, but I will keep it. Okay, I will keep it on my chart because this is the breakaway gap from previous price action. I would like to see how it reacts from there. But it went to the water block and now it's retracing. I want to see some kind of big run through this fair value gap. I mean this fair value, some kind of run like this. Okay, boom. It will just go boom, something like that. Okay, if I have seen that, then that will be easier for me to frame a trade. And brother, I don't know how to explain why I didn't mark that 1 hour big fair value gap, because that is fair value gap, but you can't use that fair value gap like others. Okay, if you have seen the biggest fair value gap, you have to think like that is the imbalance. I mean, sell side imbalance, buy side inefficiency, or buy side imbalance, sell side inefficiency. Price will go over there to fill the imbalance, and that is the thing. Okay, that is how you have to anticipate that type of fair value gap right now. But later, give me some time, brother. I'm just telling about fair value gap for 1 week only. I need minimum 2 more weeks to talk about fair value gap. I didn't tell you anything. I mean, I didn't even tell you something hard about the fair value gap. I just telling you the easiest thing. Right now, I'm telling you the easiest thing about the fair value gap. I told you, brother, fair value gap is something which is the heart of this concept. So don't just assume that it is too easy to utilize. I am just trying to give you the easiest thing like macro first. then I will go to the hard step, okay? And it will take little more time. I'm so sorry, but it will take more time. I don't know how to pass this too fast, okay? Uh, Open heart mystery. I think you got your answer, brother. I'm glad to be here. An apostolo. How? Oh man, how are you, brother? An apostolo. Martin, C, thank you. I like your explanation. I do not trade today. Okay, that's good. Okay, bro, I understand. Tropical music. Thank you. Open heart mystery. Thank you, brother, for understanding. And now I think it's enough for today, right? Because what time is it now? 10:37. You guys will check the. I will go to the UAE. I would like to see because that thing gave me a loss, right? But that is not my fault. Trust me, brother. That is the fault of the price action. And see, it has actually later it went higher and take the sell side. I mean the buy side liquidity. But what? How it react over here? Oh man, this is disaster. That's why I don't like. I mean. But it has traded, I mean, taken the buy side liquidity, it has traded this fair value gap. Now my expectation is it will go lower. Okay. Now I am expecting that it will go lower as it has taken the buy side liquidity and also traded the fair value gap. If it failed to go, I mean, above the consequent encroachment, I want to see that market won't go inside the fair value gap. That is the thing I want to see. But if it go inside the fair value gap, the consequent encroachment should be hold should hold the price, okay? And then you will start to look for sell. You see all of this sell side liquidity is very clean. And in Monday, we actually see this kind of reaction. I mean, if price will go higher, it will go lower. This thing happens in Monday, okay? So you will not get, I mean, one-sided run. You will get some kind of both side run. It went higher, it takes the buy side liquidity. Now it's time to take the sell side liquidity. And I'm glad we can still okay. Can I restart? Okay. I'm glad you bro. Thanks in Turkey. Jarjeras, brother, you should have come here before. I mean, last month I went Turkey. I mean Istanbul. So if you were here before, maybe we would meet meet together in Istanbul. That's very beautiful area. I mean, Istanbul is very beautiful. I love that city. Can you guys hear me? Still Nasdaq. I am not going to sell it. I am not going to sell Nasdaq until it breaks this low. I mean this fair value gap. When it will be lower than this fair value gap, then I will think about selling or something. Okay. Until then, I don't have any intention sell Nasdaq. Am I live or not? I mean, am I live? I don't know. No internet. I think I have internet. Yes, can you hear me? Am I still live or not? Okay. So I'm back. Okay, okay, okay. Thank you. I'm back. I thought I'm just gone. 23 partial. I have entered taken 90%. I am glad you okay, selling you enter 23 partial USD. What the hell is that? So many manipulation. Now I hate it. Hans, that is the thing I was trying to tell all of you guys. I mean, if you really and in Forex, so many manipulations, brother. Trust me, so many manipulations. I can't just explain it. I don't know why people still trade Forex. Maybe there is something, I mean, affection works. But in my opinion, future market has more precision, okay? More precise price action over there. Istanbul is beautiful. You must come again. Brother, I know, like maybe after 3 months, I will go back to Europe, and that time I will try to, I mean, confirm my plane ticket in Turkey Airlines again, because the Turkish Airlines, it has a very nice, their manner is very good. They they represent everything with a very nice, polite way. Okay, I really love that. That was my first time in Turkish Airlines. So I really love that. Even I got some free food in the airport. I mean, when I had the transit, I tried to go outside. That's why I was needed the visa, and unfortunately, I had to stay near about 2 hours inside the airport, because it takes time for the visa processing. And then in the meantime, actually, I got some free food from the airline. That was awesome, brother. So I will try to go over there. I mean, uh, in Turkey again, maybe 2 to 3 months, after 2 to 3 months. Okay, you are live, bro. Okay, I'm still with you. Tropical music. Thank you, brother. It's finished. Thank you, brother. Yes, I can hear. Thank you, brother. Thank you all. Because my net was, I mean, another phone. It wasn't actually connected with the internet, so I thought I'm not live yet. No more. Okay. So I think that's all for today. I mean, I have already successfully wasted so much time of, I mean, your time, not my time, time successfully, and learn from precise market. And this Nasdaq imminently has the precise market price action. Okay, so if you want to learn, you can learn from this market. This that is a very straightforward logic for me. I think I need to. I mean, not millionaire. Maybe you will earn near about 400K, 500K, 600K dollar. I will meet with you guys. Trust me, I will meet with you, all of you. You will just give me a screenshot that, bro, I have earned near about 500K, 600K, 200K. I will meet with you. Why it's just buffering over here? I am just, oh man, like something is not good over here. Uh, I'm just buffering. Okay. And please, if you are new, you can give me a subscriber. If you love my content, you can give me a thumbs up, share my content, and comment to the comment box. It's up to you. If you think it's I'm worthy, then you can do it. Okay. So I think it's enough for today. See you guys. Bye bye. Oh, yeah, I have missed the entry over there. Oh, it's okay. Now we will be in the macro. I will see later how it works over here. So, can you hear me? I mean, let me know, because I shouldn't go. Just I don't want to go. I just need to say bye, then I will go. I'm very fine. I mean, maintenance is okay. I mean, how to see the comment? Why is your comment, guys? Oh man. Okay, tropical. Okay, you can hear me. I really would like to close my streaming right now because I'm going to be dumb. My internet is going to. I shouldn't use that word, but not better. Okay, thank you. My internet is not working, and I'm worrying about that. Okay, so I hope I will talk to you later. Thank you for thanks guys. Use the program, sir. Okay, I will do everything, but right now I have to go. I have to go. My internet is just showing me that he doesn't want to be with me anymore. Okay, and please, guys, I'm so sorry for anything I told you. If I am rude ever I'm rude, I'm really sorry for that. Okay, thank you, guys. I will talk to you later, maybe tomorrow, and I will try to be live at Twitter now. If you are with me in Twitter, that will be great for me. Okay, so see you guys. Bye bye.